Zacks rank buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks rank buys. Let's talk about some aggressive growth stocks now with Bill Wilton, our aggressive growth stock strategist at Zacks.com. Here's one that is a recognizable name, although one I haven't heard in a while, Lear Corporation, LEA, the ticker symbol.
What they do is they make seats and other electronical systems for cars, so electronic seats, adjustments like that. And they've actually just reported a blowout quarter. Their earnings per share came in at $3.16, which is well above the estimate of $1.30. One of the things that we're seeing is vehicle production has been, obviously it's slowed down at the height of the recession, so there's a lot of pent-up demand. They saw production in North America alone increase about 73%. China's up about 24%. And even in areas in Europe where, they're having the most concern as far as the global recovery, a lot of people are concerned about that area, their production was up 11%. So even the most difficult areas are seeing signs of improvement. They also went ahead and raised their outlook. They left their full-year sales estimate about the same at $11 billion, but they are expecting higher earnings and higher free cash flows. And so that means they're operating even more efficiently than they had expected. Additionally, thanks to that bullish outlook, analysts went ahead and raised estimates, which created a pretty solid value here. They're trading at about 14 times forward estimates and a PEG ratio near 0.8. So those growth rates are coming in at a very solid value as well. This is not a shock to investors, I guess you could say, by looking at the chart, as people were buying up shares of Lear well ahead of that earnings report. And right now they're pressuring a 52-week high. They do have plenty of momentum going here. If the market will cooperate, they could have a good chance of pushing through that level.
Okay. And this name I have heard in the recent past, Steve Madden, SHOO, the ticker symbol, makers of footwear.
Yeah, they make shoes and accessories under the brand name Steve Madden. It's a fairly recognizable brand, and they're in a good price point. They're not the expensive shoes, but they're not cheap. So people that are looking for quality items that are going to last them a while is kind of what the consumer is out there looking for right now, so they fit the bill. On July 29th, they reported quarterly results. They saw net income jump about 63%, so obviously that's fantastic for them. And that came on an increase in sales, not just better margins, which is what a lot of other retailers are seeing. Their sales went up 36% to almost $160 million. So they're improving. Earnings per share came in 13 cents better than expected at 70 cents a share, and that was compared to about 44 cents 1 year ago. The other nice thing that they said during their quarterly report was that they're still on track to double their earnings per share by 2014. So they do have that aggressive growth stance. They're looking to improve on both sales and margins over the next 4 or 5 years. So they're a good long-term growth story as well. They did slip to a number 2 since I wrote about them originally. But that's not really a huge concern. A number 2 is still a buy, according to the Zacks rank, and they are priced pretty fairly as well, about 14 times forward earnings. That PEG ratio is coming in at 1.0 right now. As far as, I mentioned the long-term outlook for them, you can see that the earnings estimates are already trending higher at a very significant pace. And given what management has had to say, we really expect that to continue on for the long run. So there's definitely a lot of upside over at Steve Madden, not just for the near term, but also a long-term growth story.
All right. Do you own either of these two?
I do not.
If you are not already at our homepage, Zacks.com, that means you're accessing this video from outside of our website. So you should get over to the website, and over in the upper right-hand corner of Zacks.com is where we put 4 new stock pick ideas for you daily, one in each of the investing categories that we write about on the website. Bill's category, aggressive growth stocks included. There are stock archives as well, so if you were to click on the most current link next to an aggressive growth stock in that section, it'll take you to the most current story that Bill has written, and then at the bottom of that story, an archive of some others from the recent past. With Bill Wilton, I'm Terry Ruffalo.